What we're going to look at is the horizontal financial model. Up here, this is what's known as the balance sheet. And down here is what's known as the income statement. On the horizontal financial model in your textbook, you usually see the income statement coming out over here in this section to the right of the balance sheet. For now, we'll keep it below the income statement just to keep things simple. Now, when you're looking at the balance sheet, you want to think of a scale, just like this here. The scale needs to be equal on both sides. It needs to have the same amount of weight. Assets equal liability plus equity. Think of ALE. Assets equal liability plus equity. That is the equation you really want to remember here. Whenever you get stuck, think of this equation right here, and hopefully it should get you through it. Now, we're going to look at some things that make the scale go up or down. Okay? The first thing is cash. Now, the items under assets can be as follows: cash, real estate, accounts receivable. Accounts receivable is when someone owes you money. Liability, this is money you owe out. Accounts payable, meaning you've bought something and haven't paid for it yet. Unearned revenue means someone paid you to do some work that you haven't done yet. That's a liability because if you don't do the work, you owe them the money back. Now, under equity, there are two distinct sections under equity. One is common stock and one is retained earnings. And here's how to remember the difference between the two. Common stock, cash comes from sale of stock. Okay? Cash comes from sale of stock. Cash comes from revenues. Common stock, cash comes from sale of stock. Retained earnings, cash comes from revenues. Revenues are going to be when you sell something for your business. So, in your textbook, a couple of the exercises and some of the references talk about company issuing, I think, Rustic Camp Services, if I'm not mistaken, RCS. That's probably the first time you've seen the horizontal financial model. They talk a lot about, they mentioned cash comes from selling common stock. So the first thing you're going to notice is cash goes up, okay? Cash comes in from selling common stock. So then you have to ask yourself, this is the left-hand side of the balance sheet right here. Okay. Assets equal liability plus equity. That's how it works. Assets on this side, liability plus equity on this side. So right now, cash, we know cash has gone up. Okay? Cash went up because you just sold some common stock. Now, on the right-hand side of the balance sheet over here, how do we balance it out? Is it a liability? Was it an accounts payable, meaning do you owe anyone any money? Was it unearned revenue or a bank loan or anything like that? If it wasn't, it must be equity. Now, there's two sections in equity, as we just mentioned. One is going to be common stock from selling stock, and secondly, the other one is retained earnings from doing business, from selling your goods or services. And if you got money in from selling stock, that's not revenue, retained earnings. So therefore, it must be common stock. So common stock is going up as well. All right, so we know cash went up, as did common stock. Now let's look at a few other transactions. What happens if you borrow some money? You borrow some money from the bank. You go down to the bank and borrow $50,000 cash. okay? Your cash, if you borrow $50,000 cash from the bank, your cash, the bank account, is going to go up. Your cash is going to go up. $50,000 bank loan. Now, did you build any equity? Did you sell any common stock? Did you earn any money, revenue? No. So it's probably a liability. Is it accounts payable? No, because accounts payable is you borrowing or you buying something and needing to pay for it. Unearned revenue. It's not unearned revenue because it's a bank loan. So it's going to be a bank loan. So this is going to go up as well. So bank loan. So these two items are affected. Cash goes up, and over here on the right hand side of the balance sheet, on the right hand side of the scale, liability goes up as well. In other words, both transactions we've talked about so far, the scale stays in balance. That's what you want to look at. So, what happens if you perform some work for someone? You do some work, $10,000 worth of work. You haven't done the work yet. They pay you in advance $10,000 cash to do some work in the future. Cash automatically goes up because cash going into the bank. Cash goes up. And unearned revenue would go up. And the reason why unearned revenue would go up is because you haven't done the work yet. It's a liability until you do the work. So this goes up as well. So that's how to do the basics of it. A few more would be if you, let's get a little trickier here. Now, common stock. Now we have common stock. We know it's from revenue. We know common stock is from selling shares in a company. That's the only way common stock will go up or down. But under retained earnings, you have revenues. So if your revenues go up, it's going to go into retained earnings. And when you pay out money, it's going to create an expense. Now, these are two categories under retained earnings. So common stock, again, it's going to go up or down based on if you're selling stock or not. Retained earnings, if you earn money, revenues from your business, it's going to go into retained earnings under a subcategory called revenues. If you pay out money, if you have to pay some expenses, your retained earnings is going to go down. Think of it like your personal checkbook. If you earn $100, if you earn $100 from your work, your cash is going to go up. Your cash goes up by $100. Now, over here, you have to keep this in balance. You didn't earn any money in common stock because you didn't sell any stock, but under retained earnings, you earned $100. So your revenues are going to go up as well. So your revenues went up by $100. Okay? So $100 went up, as did retained earnings. That's exactly what happened. So the next transaction is you have to pay some bills. You have a $25 phone bill to pay. That's an expense. Now, just like your personal checkbook, if you earn $100, you put it in the bank, cash, your equity, your overall net wealth goes up by $100. But when you pay bills, pay money, your overall net worth declines because you're paying off expenses. So the first transaction is you earn $100, goes into the bank, $100 cash, retained earnings goes up by $100 under revenue. Now, you have to pay out $25 minus $25 in expenses. So you pay off some expenses, pay a phone bill for $25. Oh. $25 phone bill. Cash goes down. Okay, so now you have $75 in the bank. Now, how do you balance it out right here? This left-hand side of your balance sheet just went down by $25. So under here, you have to balance it out, and you have to bring this down by $25. So there you go. Now everything stays in balance. So what happened was we increased cash by $100, and then we increased the revenue under retained earnings on the right-hand side of the balance sheet by $100 to keep it in balance. We then paid off a bill, a phone bill for $25 cash, bringing down the left-hand side of the balance sheet, and then we brought down the right-hand side of the balance sheet by decreasing our retained earnings by paying off expenses for $25. You'll see a lot more of these examples in much more depth, but keep in mind that the main theme of this, what I want to emphasize, is balance sheet, assets, cash have to be in balance with the liability and equity. Think of the scale, assets on one side, liability on the other. Now revenues, expenses, and net income. The best way to remember this is when you sell, revenue can only go up from here if you're selling something for your business. If you issue common stock for cash, that's not revenue. All it's going to go up is cash and equity, common stock equity. It's not going to affect revenues or expenses at all. Okay, so the only time you're going to have revenues and expenses is when you sell something for your business and make a profit or pay some business expenses. And what's left over is your net income. Okay, so we'll get more on that as the weeks progress. I hope this has been of some help to you. Thank you.